Hello YouTubers, welcome to the Independent Investor for January the 15th, 2018. Today I just thought I'd go over, kind of focus on commodities. Over the last 4 or 5 months we've seen quite a strong move, especially in oil. Oil futures have gone up roughly about 50%, which is quite a strong move. I have talked about how I thought prices would kind of be constrained in the $50 range because as OPEC cut back, the frackers would increase their production and hold the price in that area. But we've had a pretty solid breakout now. We've seen, we've gone up to the $60 range, and it seems to be holding. And it seems to be a bit of a concerted effort between OPEC and Russia in controlling the amount of production. So then we can see here, last July we were about 42, now we're up to 64, and it's been a pretty steady climb, and actually accelerated over the last month or so. So I have mentioned, I haven't added any new positions to my portfolio on, that I haven't mentioned in previous videos, but I continue to hold British Petroleum, BP, which has done very well over the last year or so and still continues to pay a good dividend. I originally bought BP as a dividend play about a year or so ago in the $37 range, and now we're up to 43. So I continue to hold that, mostly for the dividend, and it has turned out to be a pretty good investment. I've also mentioned I bought Noble. These are the oil services, so the drilling. Of course, as prices go up, companies want to start to spend some money on expanding their inventories again. So we've seen Noble Corp, which has actually had a very bad couple of years, and but it's shown to be basing out over the last few months there, and has actually over the last few weeks had a pretty strong rally, moving from $4 right up to $5.50. So again, I continue to like this one just as a recovery play and a bit of value play. It's trading below book value. It's still losing money, so we need these oil prices to stay in the $60 or high $50 range for them to hopefully get earnings. But Noble is one of the biggest players in this field, and I have a video just on Noble and Neighbors, which is again a similar play, and the charts are very similar again. Neighbors now has moved from the $5 area up to the $8 area, so that's a fairly good percentage move, but it still pales in comparison to what they were trading at a year or several years ago. And Neighbors, for example, was trading up at $18 just a year ago this February. And so I continue to like those. Again, just targeted as kind of turnaround plays. I will sell and liquidate them if oil prices do start to come down. Also, I have added to Gold Corp, which I have mentioned. The symbol is GG, just because again gold does seem to be, after being held back a bit, it just seemed to be a bit in a rally again. We're up to 1341, which is close to the previous high, and we're still moving off the 1120 back in 2017. So again, that's a little bit linked with the dollar index. The United States dollar index has dropped, so that helps gold. And there does seem to be a move away from the the petrodollar, the US dollar as a reserve currency, with China and Russia now having an agreement to trade oil in the renminbi, not the US dollar, and it's going to be backed by gold. So we do continue to see China emerging more as kind of a dominant player in the world economy, and again that's having an impact on the US dollar. I also have IMF. So IMG on the Toronto Stock Exchange is IM Gold. I continue to hold that one too. It's had a pretty good trend. It's in a nice, on the weekly charts, it's on a nice channel that continues to slowly trend up, and it's performing actually quite well. And one I've mentioned about before is Capstone Mining. We've seen copper prices actually, again, it's kind of the trio, oil, gold, and copper, kind of been the three strong commodities. And over the last 6 months or so, we can see here copper is now, futures are now trading at $3.27 from a low of $2 just over a year ago. So again, that's a good strong 50% move. It seems to be holding that quite well. Technicals are still strong, staying above the moving averages. And there has been talk, which I've mentioned in previous videos, on China building out the Silk Road, increasing trade with India, and so that again should continue to create demand for copper, and it seems to be reflected in the price moves. So again, in Capstone, again, these are all mostly trading vehicles. I'm not a big fan of commodity stocks overall because they're so capital intensive, and as I've mentioned before in previous videos, they typically over time do not create a lot of shareholder value, but they are good for trading vehicles if the underlying commodity does increase fairly strongly like it has in these cases. They can be a pretty good investment. But unlike a good technology stock, which Google or Microsoft, if you get in early, you can basically just hold them for a decade and do quite well and not really have to trade too much, just kind of reviewing the quarterly reports and making sure they're staying on track. What we can see here, Capstone is continues to be in this nice channel, almost dropped out, but it picked up again. So we have moved from 80 cents up to like $1.55, so almost 100% move since last June. And so I continue to hold that. Again, all these are dependent on the commodity prices rallying or staying where they are right now. So anyways, that's just a quick video today on those commodities, and this weekend I'll try to get the weekly update out again. Okay, thank you for viewing.